Hello, welcome to the European Open briefing for Tuesday, March the 14th. I'm Rafi Parajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So the focus is pretty much on the Fed this morning in Asian session, and also at the start of the European Open. The Fed begins its two-day monetary policy meeting later today, and will conclude its meeting tomorrow, where they're widely expected to announce 25 basis points rate hike in US rates. In other movements this morning, the euro is weaker after hitting 1 month highs yesterday. We had some dovish remarks from ECB officials, which pretty much killed those rumors that the ECB may start to raise rates before QE has ended. And the pound is another big mover today, following basically the Brexit bill has finally ended its parliamentary journey, authorizing the Prime Minister Theresa May to begin the Brexit process. So there's no signs yet that she will be doing that anytime this week. The Australian dollar is also weaker. We had some weak business survey data, and we had quite a bit of a batch of Chinese data this morning, though the yuan, that was pretty solid numbers out of China, though the yuan fell to 2 month lows against the dollar, and that was mainly due to weaker midpoint being set by the People's Bank of China. But let's begin with the dollar. It's being driven higher by rising US Treasury yields. The 10-year yields rose to the highest since mid-December, hitting 2.629% on those expectations of an imminent rate hike by the Fed. The main focus is, given that the rate hike is pretty much priced in, much of the focus will be on what the FOMC's projections will show about how many rate hikes committee members expect for 2017. Back in December, they projected 3 rate hikes. If the median projection goes up to, say, 4 rate hikes, that could potentially drive the dollar even higher. If not, we're likely to see major moves in the dollar. Perhaps the dollar might even fall after the FOMC announcement, if the FOMC gives out a not so hawkish outlook in its quarterly forecasts. Moving on to the euro now, we can see that 1 month high hit early yesterday. It's since drifted lower. We had ECB Governing Council member Jan Smet saying that last week's meeting did not signal a policy change, and also the Bank of France governor saying that the upside risks to inflation are much exaggerated. So all of this has weighed on the euro, and of course we also have the stronger dollar as well. Of course, yesterday it had broken above the 1.07 level. Now it's currently trading around 1.0640. And apart from the ECB meeting last week, we had those rumors late on Friday, which suggested that the ECB had already begun discussing the possibility of raising rates even before the QE program has ended, in contrast to the ECB's current guidance, but ECB officials appear to be talking down such rumors. Moving to the pound now, we can see a big drop just a few moments ago for the pound. It hit an 8-week low just about $1.21. Yesterday it was doing rather well, climbing above $1.22. Of course, late yesterday the UK MPs rejected amendments by the House of Lords, one of which was to give immediate rights to EU citizens to stay in the UK after Brexit, and the other one was for MPs to have a meaningful vote over any final Brexit deal, but those have been voted down by the House of Commons, and the House of Lords did not contest that. So the House of Lords, after being rejected by the MPs, they approved the Brexit bill without any amendments. So Prime Minister May now has the green light to go ahead and give formal notice to begin Brexit discussions with the EU, but that's not expected to happen until the end of March. Possibly March 27 could be a date which could be used by the Prime Minister to trigger Article 50. The reason why she delayed it was because the Scottish Nationalist Party called for a fresh referendum for independence, and that's complicated the path for the UK government. Although the UK government is unlikely to approve the referendum before the Brexit process has been completed, nevertheless, it is looking like the Prime Minister May decided to let those let that initial the surprise announcement by the Scottish Nationalist Party to cool down, so as not to make things worse by announcing immediately the triggering of Article 50, given that Scotland is strongly opposed to leaving the EU. And all of that uncertainty and complication is pretty much weighing on the pound at the moment. A quick word now on the Australian dollar. We had some DNAB business confidence data which showed business sentiment falling in February slightly compared to January, though the levels remain well above average. The Aussie is currently trading around 0.7550. It found little support from strong Chinese data, which showed that there was strong demand for Australian exports at the start of the year. So pretty much we're seeing the effects of the stronger US dollar, which is impacting not just commodity currencies but also commodity prices. And finally, let's have a look at the yuan. We can see the yuan steadily weakening to 2 months lows. It's currently trading at 6.9133 per US dollar. The People's Bank of China set a weaker midpoint on those expectations that the Fed will raise rates tomorrow. We had Chinese investment data and also industrial output data, which beat expectations. The only disappointment was the retail sales numbers, which fell slightly compared to the prior month. Overall, we saw output and investment being driven by increased infrastructure spending and also a strong real estate sector. There are some concerns that the property sector is hitting up again, despite efforts by the government to cool prices. We're also seeing increased bank lending, which is fueling concerns about rising debt levels. But for now, Chinese growth seems to be holding up. Overall, 2017 growth is expected to average at 6.5%. This is slightly down from the government's target of 6.5% to 7% in 2016, but still not a too bad number for GDP growth. Moving on to economic calendar. We can see there the Chinese data out earlier already. Urban investment 8.9 versus expectations of 8.2. Industrial output 6.3 versus expectations of 6.2. Retail sales more disappointing at 9.5%. We had some German final inflation figures, and shortly we're going to have the ZEW Economic Sentiment Index. Later in the Eurozone, we're going to have the industrial production for the whole of the Euro area, but it's looking like a pretty much quiet US session later in the day, so that pretty much means that the focus will remain on the Fed and tomorrow's decision. That's it from me. Thank you very much for watching, and have a great day.